And now, with America's most complete financial overview, here is Gene Morgan.
Today's market behavior was marked by an acceleration in volume, near the highest volume of the year. It represented churning behavior, a great deal of activity, little progress. While we see the market attempting to arrest its downside behavior, attempting to rid itself of all willing and unwilling sellers, and we recognize that it has been in a declining configuration below zero lines in oscillators for almost 10, if not 11 weeks, we must also observe that the market has not yet added that impetus to the upside to convince us that upside action is in store immediately. We need insurance to indicate that. We need wide separation of posting to the upside in our summation index, and that is yet to come. Now, as we view the Dow graph on the day, we opened plus 4 points. By the second hour, we were minus 4 points, and we stayed negative throughout the session, closing near the lows of the day with the industrials minus 7.27, joined by the transports, which were minus 6.43. The exception, the utilities, were plus 1.64. The tick was at minus 271. Big board volume expanded measurably to 148,770,000 shares, the turnover. The Quotron change shows a minus 6, just one digit, and that would represent relatively unchanged readings, nominal change, and on the trading module of the New York Stock Exchange, you find that to be the case. Advances prevailed, but very narrowly. 765 issues in the advancing column, and that is 40% of advanced decline line behavior. Declines numbered 756, and that's 37%. Moving down to up volume, down volume, we find that down volume prevailed with 79,890,000 shares in the down volume column, and that is 53% of activity. Up volume accounting for only 57,760,000 shares, and that is 38%. The net differential would be evidence of shrinking values and money leaving the market. Moving now to the American exchange, we find the change here is preceded by a minus reading, a minus 0.24. Not a large change, but nevertheless negative. Amex Market Value Index reads 223.99. The tick was at minus 28, and volume was 7,940,000 shares. Quotron change here was at plus 15. And that's not large digits, but as we move to the trading module, we find on the Amex that declines prevailed. 244 issues in the declining column, and that is 32%. Advancing issues numbered 228, and that is 31%. Up volume prevailed over down volume. Up volume responsible for 4,230,000 shares, that's 53%. Contra action from that seen on the American Stock Exchange. Down volume was responsible for 2,290,000 shares, and that's 28%. These figures pretty much equal and opposite to that seen on the American exchange. Now, let us change of pace, if you please. At this time, we are reopening and funding $7.5 million SEC registration of the Pacific International Futures Fund. This fund that has been so ably managed by a subsidiary of the Security Pacific National Bank, this nation's 7th largest bank. The fund itself, as you may know, is up more than 75% in just 2 years. 2 years ago, we conducted meetings of this kind, and we invited you to come. Did you act? Come up off of your indecision and join us in these free information meetings so that you can put this important talent to work for you. Join us now. If you would like to know the comparisons during the same time frame that the Standard & Poor's Index has been up 12%, you find that money managed by the Security Pacific Bank's Foreign Exchange Department subsidiary is up over 75%. Come learn how you can benefit from this talent. Join us at any one of the free information meetings. For example, we find that we will be at the desert in Palm Springs this coming Saturday, hosting the Continental Breakfast at 10 a.m. at the Gene Autry Hotel. Join us there if you can. And the following week, that's the Gene Autry Hotel. Now, Tuesday of next week, 3 p.m. and 7 p.m., we'll be at the Pasadena Hilton in Pasadena on the same story. And Thursday of next week in Claremont, we'll be at Griswold's at 3 p.m. and 7 p.m. And the following Saturday, hosting the Continental Breakfast for our guests, we will be in Rancho Bernardo at Rancho Bernardo Inn. That's Rancho Bernardo Inn. That's October the 12th, hosting the Continental Breakfast at 10 a.m. Now, in all instances, won't you be kind enough to indicate your interest in attending? All you need to do is to pick up the telephone, dial 1-800-GM-TODAY. That's 1-800-GM-TODAY. As we look at the securities market and we look back across the bear markets for the last 50 years, we might observe that in the last 9 bear markets, or last 9 bull markets first, the average bull market has lasted about 3 years and 3 months. And this one began, by my measurement, on August the 13th of 1982. You count them. The average bear market, as measured by the Dow, has progressed percentage-wise 180%. This bull market has progressed 178%. So count the time, count the distance, and see where you think we are. Now, as we view the market as measured by the Dow, we find that that index is distorted by a component, General Foods, and this index is not that far away from its high, which occurred here at the end of my pointer at the 1372.20 level, and that was late July. Today's Dow change was minus 6.44, a close of 647.23. The intraday low was 642.20. The intraday high was 659.52. Of the 30 components making up the Dow on the day, we find 8 of the components were up, 20 were down, 2 were unchanged. 5 individual components changed by 1 full point or more, and they were mixed. DuPont up 1 7/8. IBM off 2 full points. Merck off 1 3/4. Union Carbide off 1 1/8. Woolworth, an exception, up 2 1/8 points. Now, volume is always seen as is price near the end of my pointer. As you view volume, you will observe that you must take your vision back to July to find volume near this level, and going beyond that, back to May, and going beyond that, back to January, February, to find volume at this level. And the fact that we did not make any progress would be evidence of churning behavior. A lot of activity, no progress. Now, volume expended by a measure of 17,805,000 shares on the big board alone, and big board volume was rated on the update of 148,699,000 shares. Viewing now the Dow 20 Transportation Index, we observed that this index had a change on the day of minus 6.44 and a close of 647.23. Intraday low was 642.2, the line violated. That's seen near the end of my pointer. It is now a line of declining influence that controls the pattern. We find today sharp upward side behavior, snapping back up to the declining tops line did take place. The change in the day was a plus 1.64, a posting of 157.77. Now, to view the real market, we are viewing trade levels, computer-generated summary section on the New York Stock Exchange, and this, we observe, takes into account all common stocks on the New York Stock Exchange, a daily unweighted price averages basis. It is this declining tops line that controls the pattern because the long-term, intermediate, and long-term rising bottoms line has been violated. We find the price change on average share today was down 4 cents. The dollar and cent value of all shares in the New York Stock Exchange rated at $61.24. Now, the McClellan oscillator has been in negative territory for an extended period of time. If we count them, we'll find that my pointer is superimposed on the 0 line, and the oscillator has been negative for about 11 weeks going into this week. That is about as extended a period as we experience negative behavior, all but for 3 days of positive behavior here. Now, it therefore is time that this index become positive, and that is in prospect because as I position my pointer down across these major tops, you will find that we did have a bottom above a bottom after having witnessed the index in the extremes of negative behavior here, and that we have now broken out above this declining tops line and have broken out above 0 line. That's this point here. Now, we need follow-through. We find the reading today is a plus 14, up from the previous day's reading of plus 9. Today's plus 14 McClellan oscillator reading is made up of a 10% index reading minus 84 and a 5% index reading minus 98. Now, as we view the McClellan summation index, its companion tool, let me call your attention to how high was recently, and the fact that this is the 11th week of a decline from those highs. Now, if we were to carry our vision back even further, to even higher highs, we will observe in the advanced decline line pluralities and the difference between the two, we have to carry our vision back to late February to find the highest highs. So we're 33 weeks along from the highest highs and in the summation index, and 11 weeks along from the most recent highs. So we have been in a liquidating posture for an extended period of time. It is time that we break to the right of this declining tops line, evidencing constructive behavior. We have seen a reversal in the summation index. However, we do not note the observation, we do not have a widened separation of posting to the upside, which would be the evidence of confidence of a move. Let me ask our camera talent to come over and see a previous interval where we have wide separation of posting to the upside. You see, that is the evidence of energy coming into the market. We don't have anything like that yet. We need to see that energy. Now, we find the summation posting today is higher than that of the previous day's posting, with a reading of plus 56, up from the previous day's posting of plus 42. Now, secondary stocks have taken it on the chin. They have violated intermediate to long-term rising bottoms lines, as has been the case here on the Amex Market Value Index from its December 14th lows, seen here at the beginning of this rising trend line. We find the change on the day was minus 0.24, the posting at 223.99. Now, on the New York Stock Exchange Composite Index, we are snapping back up to declining tops lines that control the patterns until proven otherwise. This index turned lower on the day. The change was minus 0.41, the close at 106.36. In the over-the-counter market, the Nasdaq Composite Index is approximately where it was in late January. Just bring your vision back across price history. Late January, we were right here at this same level. And as a consequence, those in the over-the-counter market are not going to feel very hardy about the market's action. The change on the day was minus 0.62. The posting on the day was at 281.15. In the Nasdaq Industrial Index, same observations. Just bring your vision all the way back across history, and you'll find that it brings you back to where you were in late January. So you're not going to feel like you've made a lot of progress. For example, here is a double top reversal, short-term, intermediate term, and you find tops beneath tops beneath tops, and therefore we're obliged on the short term to draw a declining tops line. Now, as we find the posting on the day, we find the change to be minus 1.70, the close at 284.59. As we view London Gold second fix, we find it higher by $2.75, the fix through to $24.95. As we look at gold on the COMEX in New York, we find it higher by $1.20, the close at $3 to $28.30, intraday low $3.26, intraday high $3.29.70. Silver on the COMEX in New York was higher by 5 cents, price so is seen near the end of my pointer, to close at $6.13 an ounce. Intraday low $6.10, intraday high $6.16, very narrow intraday change. In the financial instruments, the Treasury bills, the 90-day instruments, recently broke out above overhead resistance. The change of the day is minus 6/32, the close at 92.88. Intraday low is 92.87, intraday high is 93 even. Treasury bonds traded on the Chicago Board of Trade were lower by 19/32 to close at 75.04. Intraday low was 75 even. Intraday high was 76.08. In the currencies, as we view the British pound, we find it higher by 35 points to close at 140.80 to the dollar. Intraday low is 139.60. Intraday high was 141.70. The D-mark was lower by 19 points to close at 38 even. Intraday low was 37.91. Intraday high was 38.30. The Japanese yen was lower by 10 points to close at 46.90. Intraday low is 46.77. Intraday high was 47.20. The Swiss franc was lower by 31 points to close at 46.64. Intraday low is 46.52. Intraday high was 47.01. Stock index futures. First, the reference to the basis being cash or spot. We find cash futures off 1 full point, 1.00. The close at 184.07. Intraday low is 184.06. Intraday high was 185.94. Now, the Standard & Poor's Futures Index, traded on the Mercantile Exchange, snapped back up to a declining tops line and was turned lower on the day. So yesterday's action was up here. Today's action was up to against the line, but closed lower. The change of the day was minus 2.15. Multiply that figure, 2.15, by $5 to determine the price change of the given contract on a given day. We find the close at 184.35. Intraday low, 184.30. Intraday high, 187.05. Closes almost absolutely on the lows of the day. Now, the Value Line Futures Index also snapped back up to the existence of the previously drawn declining tops line and was turned back by that line today. The change was large, and it was negative. It was minus 2.55. The close at 190.85. Intraday low was 190.60. Intraday high was 193.95. Now, the New York Stock Exchange Composite Index, Futures Index, traded on the New York Futures Exchange, came up to its declining tops line and was turned lower as well, turned back by the presence of that line, I would suggest. traded higher and closed lower. One-day reversal. The change minus 1.30. The close at 106.45. The intraday low is 106.40. The intraday high was 108. Now, as we look at the overall market, we find in the advanced declines of the Nasdaq market, the advances prevailed very narrowly. 935 issues in the advancing column and 929 issues in the declining column. How many of you attended events to learn about master loan real estate limited partnerships and how you could generate a 19.5% yield out of these investments? If you have not, you should acquaint yourself with this opportunity. Yields are very hard to come by in these days with declining rates. The Master Loan Real Estate Limited Partnership will be discussed in Palm Springs at the Gene Autry Hotel as we host a light buffet this coming Saturday at 1 p.m. We would hope you would join us at this coming Saturday and call 1-800-GM today to indicate your interest in coming. 1-800-GM today. Now, at 10 in the morning, hosting a continental breakfast in Palm Springs at the Gene Autry Hotel, we'll be discussing the performance of the talent managing this entity. And this is the performance of the Pacific Financial Futures Fund, now the Pacific International Futures Fund, up 75% in 2 years versus the Standard & Poor's 500, up 12% in two years, and that's in a bull market for stocks.
Every day that the sun rises, the futures market is a huge part of our lives. From the bread we eat, to the food on our table, to the fuel in our cars, clothes on our backs, steel in our buildings, money we spend, to the homes we own. Every aspect of our lives is a part of the futures market. Investing in futures is a way to actually make money while benefiting from the very factors that may adversely affect the rest of your investments. It's all part of the dawn of a new financial age. Gene Morgan Financial, searching out the most profitable investment opportunities and opening new horizons for you.
We have an important guest in the studio, and in our presence is Mr. Keith Campbell, whose team manages futures funds, managing more than 11 funds. Keith, I think your firm manages more than 11 funds, and that's more than any other entity in terms of funds managed, perhaps not more than others in terms of dollars. How many dollars are you managing at this time?
About 32 million, Gene.
In 11 funds, and you're managing these for a number of different entities. You manage funds for A.G. Edwards, you manage funds for Thompson McKinnon, you manage funds for North American Securities, you may even manage funds for others.
Even Gene Morgan Financial.
Even Gene Morgan Financial. Now, most funds have taken it on the chin in the last couple of weeks. There have been exceptions, of course, and those that were overly exposed to currencies, who were not able to operate in forward markets, took a bit of a setback. Tell me, what is your perception of the outcome of funds behavior in general in the last couple of weeks, and yours in particular?
Well, it's no surprise that weekend before last, going into the last week in September, there was a major effort made by the Treasury, including a consortium of foreign trading partners with the major foreign trading currencies behind them, to drop the dollar down in terms of its purchasing power relative to the Deutschmark, the franc, the pound, the yen, again, the major trading currencies.
Could that government intervention been foreseen?
Well, there certainly was some speculation about it, but we believe, Gene, because we're pure technicians, we believe that the market will usually tip its hand before something like that comes along. And it actually came pretty close to tipping its hand, because by the close of business on Monday, we had turned all of our long dollar positions into effectively short dollar positions based purely on the criteria of watching the market and letting it give us the technical indicators based on our computer analysis.
In terms of your funds, did that give you a pretty hefty setback in values?
Oh yeah, we got clobbered. We took one of the worst one-day losses perhaps in the 14 years that we've been trading in the futures markets. We lost about between 7 and 7.5%. Not only because of the currencies going against us, but we had almost every position that we had reacted negatively to that because the currencies have played a major part in the trend in physical commodities, in gold, in the inflation rate in the U.S. So the physical commodities essentially have been going to the downside, and we were short. The foreign currencies essentially had been to the downside, and we were in effect short. And all of a sudden we got caught literally reversed in everything. And in spite of that, I say we only lost around 7%. Now, a lot of our positions, but especially the currencies, turned around by the end of the day. And actually, in the last week and a half, we've gotten most of that back. I'd say we probably got a negative 2% since Monday a week ago. Fortunately, we started out, though, Campbell and Company started out with a positive result for the year going into that period. Our average account was probably up somewhere around 15% for the year going into that day, and we're probably up somewhere between 10 and 12% still. So contrary to the industry as a whole, if you look at at futures funds, we have had a relatively positive year, although it hasn't been a year to crow about yet. We hope to make the fourth quarter special, though.
There are those individuals who may have purchased shares even at higher levels than they exist at this time. There's no denying that, of course.
Oh, absolutely. If you came in May or June, I would say we had a down month, and we had a good up month, and we had a good down month, and it's essentially probably the total effect of the negative impact of people who say bought in the spring in April, May, and June. It's probably down somewhere between 6 and 8% right now. But that's...
We encourage them not to look at this as a get-rich-quick investment vehicle, but to look at the long term, and your statistics still hold up over the long term. I notice that as I look at managed account reports, and I've been using this publication in our recent sponsorship of the Pacific International Futures Fund. This is the America's Clearinghouse for Money Management, and I'm citing that Pacific Financial Futures Fund ranks number 2 in the nation for the past 12 months among top performers of public funds. And it's not a fund that I was involved in, but I see that you're the co-manager of the number 1 fund in the nation with Christopher Funk, and that's for the firm of Thompson McKinnon. Would virtually all of your funds be managed in approximately the same manner?
Well, that's a financial futures fund, Gene, and therefore it's limited to, in fact, in that particular case, I believe it's limited totally to currencies, foreign currency contracts, and the actual interest rate futures. We don't even trade in gold and silver in that particular account. But most of our accounts are fully diversified funds into as many as 32 to 34 different futures contracts, and we believe in that. If you gave me a choice, I would take my most diversified fund if I were just making it purely from an investment standpoint. From a hedge standpoint, and from a performance standpoint, I do like the financial futures funds an awful lot. And our financial futures funds this year, and I believe last year as well, have outperformed our general portfolios, especially this year. 1985 has been an awfully good year. In spite of the setback of a week ago in the currencies, it's been an awfully good year for financial futures funds under our management.
Now, there are a lot of people in this industry, and you know Malcolm Weiner, of course, and he manages a very substantial amount of money, and he's taken it on the chin, too, I notice, in the course of recent behavior. I'm going to be talking to him tomorrow and trying to share some of his observations with our viewing audience, but he concentrates more heavily in currencies, does he not?
Yeah, he's I believe, and for a large percentage of his funds, he does a lot of trading in the interbank forward market in foreign currencies. You know, people, it's very easy, Gene, to look at the kind of thing we do. The futures industry is known for its speculative bent. Yet what we have done as a group of responsible managers, if I may say equity managers in this business, is to try to tone down that volatility by using as much diversification as we can, and 2, keeping our positions very small in each of the futures contracts that we put our money into. And more importantly, if you look at the results of all that which we have done, and I include Malcolm Weiner and Chris Funk and Campbell and Company and maybe 8 or 10 people who have grown over the last 15 years in this business along with us, you look at the long-term track record and you can't find anything else that'll stack up against it. And we've made some measurements both in terms of upward performance as well as resistance to downward performance. And I don't mean to make a big commercial out of this, but I think if you look at it objectively, you've got to look at the long term, not the short term. And if Malcolm Weiner had a bad 1985, I'd like to see somebody stack up against him for the last 15 years. He's been fantastic. He's been, frankly, better than we have. But then he's a little more aggressive than we are. We tend to be more diverse in our positions than he is.
What do you look for ahead? Is there the prospect that we've been in a deflationary cycle since December of 1980 when energy prices topped out? Is there the prospect that we may be in a troughing action and quite likely see some upward pressure on futures prices from this point forward?
Well, I tend to think so, Gene, because number one, the major impetus behind this one of the major impetuses behind this has been the incredible strength of the U.S. dollar. The dollar peaked in early 1980, valleyed in early 1981, has been going up ever since. That has a very strong disinflationary, if not deflationary, effect on the purchase of goods and services overseas and competing with U.S. goods and services. So I tend to think that we're going to see some increasing inflation. But, you know, the table is sort of set. If you look at this set of the trade imbalances and the budget deficits and the problems that exist financially for us right now, I kind of think that whichever way the markets go, we're going to see some big swings in the next 2 to 3 years.
That volatility should work to our benefit, those working in the futures markets.
Well, I certainly think so, and I think the opportunities are going to be very substantial.
Keith Campbell, I very much appreciate your taking the time to slip in here today. We'll have an opportunity to visit in more detail as we get back to our shop, having just picked you up at the airport. Now, may I remind those of you in the viewing audience that we are conducting free information meetings this coming Saturday, and the information meeting on the Pacific Financial Futures Fund, a fund managed by a subsidiary of Secure Pacific National Bank, up over 75% in 2 years, will take place this coming Saturday, hosting the Continental Breakfast at the Gene Autry Hotel in Palm Springs, and hope you might join us. That same day, we will be conducting an income information program at 1 p.m. at that same hotel in Palm Springs this coming Saturday. Now, that appears to be all the information that we have on our screen at this time. I'm Gene Morgan, Enjoy the Market, and I hope that you will join me tomorrow. Thank you, Mr. Keith Campbell.
Thank you, Gene.
You've been watching Gene Morgan and Charting the Market.